What's up, everybody? Thanks for joining me on D's Analysis. We're going to be looking at SMCI today. We had a nice run up. We fell underneath it, came back for a retest, got rejected, and now we've been, in a nice little uptrend ever since November 2024. You can see it's been established pretty well. And we've seen a pretty significant drop after earnings. It was a very, very brutal sell-off. As you can see, we fell from 59.14 down 25%, down to 44.55. As we had a nice breakout structure being formed, it looks like we came back for the retest, and then we actually fell back underneath this key structure, this downward sloping trend line, where we've had multiple touches along the way. And now we're back underneath this area, so we're back where we were previously, kind of just compressed in this area before making some kind of decision. We will either break down, retest, and continue that trend further down, or we will consolidate and compress until we finally have our secondary breakout and continue that trend higher. But right now, it is incredibly bearish after that huge sell-off. I don't think it's really changed too much, but in the company, long term, if you have that 5, 10, 15-year outlook on SMCI, then this should really just be a dip buying opportunity for you. And it helps you kind of stay stable in the market when you have significant sell-offs like this. So this should just be an opportunity, because if you were buying at $60, why wouldn't you buy right now at $43? What has really changed in the past 2 weeks in the company? So if your outlook is still the same for the next 5, 10, 15 years, then this should be no different, and this should be an opportunity for you to accumulate more shares in SMCI, as they have, a key role in the future of AI and chips and all the kind of infrastructure that's going to be used in the upcoming years and currently. Not financial advice, of course, but just make sure you guys stay level-headed when you see these significant drops. I'm sure if you've already been at SMCI for some years, you already know how this thing operates. As you can see, we had a major sell-off anyways, all the way down to 85%. So this should be nothing out of the ordinary. And when you look here, February 2025, that drop was 60%. So if you've been in this thing for a little bit of time, especially since March 2024 or after, you know that this thing can have some significant drawdowns as well as incredible rallies. But that's all part of the volatility. Volatility, it's going to go both ways. If you want aggressive volatile moves to the upside, you're going to have to be able to accept those aggressive volatile moves to the downside and use them as opportunities to accumulate instead of getting scared. Now we are running into the 20-week SMA right here, and it comes in line with our trend line to the upside. So that's confluence together, but we are still facing this downward sloping trend line, so that's going to be a little bit of resistance on us. And when we take a look here at the daily, you can see that we're stuck in between the 50 and the 200, kind of just in limbo right now. We'll see what happens when we come up to the 50. I would imagine if we make it down to the 200, we get an aggressive bounce. But if we run up to our 50, we could see a little bit of resistance before breaking through to the upside. On the weekly Bollinger Bands, we are finding a level of support here. We're at the middle band after falling from the red upper band. And on the daily, we are pushing towards that green band. We'll see if we actually come into contact with it. That kind of lines up with our 200 SMA. So we'll see where that ends up playing out at. On the daily 8 EMA, we've come into contact with it and pushed down a little bit further off of it. And on the weekly, we kind of have the same concept where we touched it almost once and then the secondary time, and we'll have a continued move to the downside. These 8 EMAs usually hold the trends pretty well, at least short-term trends. So we'll see how this plays out. Hopefully we can flip back above it and continue a nice trend like we saw over here. On the weekly RSI, we're still looking pretty decent. Higher highs and higher lows established. Pretty solid move so far. You connect the bottoms, it looks like we have broken the structure, but still holding higher highs and higher lows. You could still make it a little less steep, but we'll do it like that. We have a break of the structure. We'll see if we can break back above it and break that yellow moving average, hold that, and then eventually break the 63.5 area and make it to the 70 overbought region for a nice aggressive move to the upside. Nice green shaded area. And here on the daily, we've reached all the way down to 35. And as you can see, that's it's a pretty key level that we've reached prior. If you draw a line, you can kind of see we typically turn around here pretty often. So anywhere from that 35 to 30 region, you usually find some kind of a turnaround. Sometimes we do dip a little bit further down, but your odds of turning around start to increase once you break underneath that 35 structure. 35 to 30, you have pretty good odds of getting a turnaround for a nice move to the upside. As you can see, it's happened multiple times here. On the weekly MACD, we're still looking pretty good. Higher highs and higher lows, but we are losing a little bit of momentum. As you can see, the volume has dwindled down dramatically after that massive sell-off. You can see it's pretty violent move to the downside, but we're still holding in bullish territory. And we have seen something like that happen before over here where the volume went flat and then we started to ramp back up. So hopefully we can see a move like that or something aggressive like this to the upside and get this thing charged back up. But it has still been incredibly bullish with a strong structure to the upside. On the daily MACD, a little more bearish, as you can see, pretty aggressive sell-off. Volume is dying down a little bit, so it's starting to go a little bit more bullish, but it's still pretty bearish overall, though. Not surprised at all after seeing a 26% drop, so that's kind of what happens. But once this thing gets going, it can have some aggressive moves to the upside, and all of this can really just be behind you in the snap of a finger with a company like SMCI. And on a larger time frame to the downside, when you pull it off of this entire level here, you have your 0.5 to the 618 sitting at 83 to around 69. We found rejection off the 382 once, and now a second time we've bounced off of it pretty hard. So that's going to be a key structure that we need to break, as well as this 0.5 to 618. So that in confluence with this horizontal structure right here, it was enough to push price down. So we had the 382 in confluence with this level of resistance, and we ended up getting a sell-off coincidentally right at earnings. It is crazy how these technical analysis levels, when you're doing TA, you look at all these structures like, okay, maybe we get a bounce here, maybe we get rejected here, and it's crazy how it'll happen right at earnings, or the breakout point happens at earnings and then this thing absolutely catapults, or some kind of geopolitical event happens right at these breakout points. It's crazy how it happens very often on different charts, different companies for different reasons. So it is very interesting how they coincidentally happen very often. But yeah, that's the levels that I'd be looking for, and I do think if we can break this structure and then eventually surpass 66, we could have a clean move, because when you take a look on the weekly candles, this is a clean move to the upside. So if we can get a break above here, hold that, you could have a pretty clean move all the way up to like 95, 96. And we know that SMCI is aggressive enough to do that. So we'll see where it takes us. That's pretty much all I have for you guys. Make sure you drop a like and subscribe on these videos. It always helps. I appreciate all your support, and I'll see you guys in the next one.